this sell now, ideally, our first level for this sell, our first level take profit is this point here. So that's why on a long term we can be looking for a swing on this guy here. You understand?
Mm.
We can look to swing it. But now let's go to the 4 hours time
So
frame.
a
Let's
buy.
for a sell.
Okay.
Like we can look to swing it from here, holding the sell and forgetting it until market gets to this point. In as much as it doesn't take out the high. But then the best point, that was
Mm.
why I think I took a swing trade on it now from around here. I took a
Okay,
swing
you have
trade on
used it
it.
already.
No, like I was on a swing trade on this guy around here. It dropped
Mm.
down to this point, making me about 70 something dollars. I exited. But the reason I exited was because I either wanted to close the re-entry I took around here. So I closed it, forgetting that I already had two positions I wanted to swing and for a long time. And that one erased everything. So my plan got trashed out. Now, what happened here? We have seen that the market has been respecting us, our order flow. And whenever market is respecting our order flow, one thing that always happens next is a deep swipe. Like market will just swipe down without expecting any levels again. I don't know if you understand.
Mm.
All these levels are like the consolidation stages before a big pump to the downside. So now if you look at what happened here,
Mm.
we first of all swiped, market took out liquidity, took out structure, took out the structure at this point, and rallied up, tapped into our main level from this 0.79 using this Fibonacci. So our entry tapped into here with a little wick, and then it got triggered. Then we took our sell. So that was the reason I actually was looking out for sales. But then after that, we took the first trade here. It stopped us out. Took the second trade. That one tagged us in. That was the reason we were able to hold. But while we were holding, market created this liquidity and a new break of structure. That was why when market got up, it still sold. We didn't take this trade to the downside. But then that was that for these guys. Now after that, today, that is yesterday, when we took a buy, I think this was the trade we were taking, we entered a buy for. So when we took that buy, our level for take profit was exactly at this point here. Are you with me?
I'm with you now.
Yeah, so this was the level we placed for take profit. Let me clear it. Okay, good. So this was the level we placed for our take profit, which was here. Now, why did I put this level for our take profit? Why I placed this level for our take profit was because one, I had break of structure here and I had liquidity grab. So this liquidity grab, the structure which the zone, the support which created this liquidity grab was this structure. So that was why I marked it out.
Mm.
Now, marking from this swing high to this swing low was now the level I looked out for. Marking from this swing high to the swing low was now the next level we are to work with. Now, my anticipation is, according to the strategy and everything, is we look for first entry here. Hold on, let me get something. So, what happens is we look for our first entry from this point here. We risk any percent, let's say 10, we risk a percentage on this particular one. It can be one or anything. We know that it's 1:3.
Mm.
Then we risk the next percentage again, which comes down to this point here. So if market taps this place, we are just going to be refining our entry or taking immediately without even refining, knowing
Mm.
that our stop
Mm.
loss is at this point. Then our target
Mm.
is here. So now let's see what happened now. Let me delete everything so that we can understand something clearly now. So now we have liquidity grab, which is here. Then we have break of structure, which was the zone which created our liquidity. And then we have our break of structure, our Fibonacci between this level and this level.
So you have to start from this middle now for the Fibonacci. You cannot start up. Yes, that place exactly.
That's where I'm start marking my Fibonacci.
Mm.
So basically, when we do that, we simply from the swing high to the swing low. So what now happened is if you look at it well, you see that the market just tapped it with a very, very like if you were not in fact most likely you will miss this entry. Hey God, this reminds me of
I
something.
swear.
Yeah, this you see this thing. Look at this thing that's going on here. This is what is going on
Mm.
step index. We are going to take step index right now. Go to see. I'm not rushing things. I'm just looking at what I've seen in the market and I'm using those reactions to help guess us.
Experience.
Yeah, so if you look at what is going on here now, liquidity happened here, market pushed up, dropped again, pushed up, and from this place it made a very serious downpour. Look again here. You can see what happened in this circle. It's happening on the higher time frame, but it happened here on a smaller time frame. I don't know if you can understand what I'm saying.
Mm.
Liquidity grab into our level, break of structure into this point. Now, this structure has not been broken on this particular um, market, which is on this particular market. The structure has not been broken. I don't know if you get what I'm saying.
Mm.
Let me make it. Let me delete this one so that you can see it better. So this is the main structure here. This is the structure between this is the swing high, this is the swing low. We are anticipating it breaks this low, and this is our final take profit. Now, um,
Okay.
ideally, me, I would have said you should take a trade using uh, bro, enter 0.5 lot on this guy. We will just slim our stop loss. Can you hear me?
Okay.
Enter 0.5. We'll slim our stop loss. We'll just put our stop loss. Let's say, let me see where that particular. Just take the sell first. We'll put our stop loss.
0.5.
Oh God, don't worry, run am. It says
And you know, say this
0.5.
is already move. Oh.
Relax, see where we'll put
It's
our stop
already moved
loss.
from the entry.
So see where we are going to put our stop loss. We'll put our stop loss at this price here.
And you know, say step index. You know, say step index, the normal, they like go up, go down. That weary. Hmm.
Enter. I
I
did on the
beg
trade
go.
though. See, I'm on the trade at the moment, but this one you are doing is
Where did
just
you
a
take? Where
re-entry.
did you enter from?
Where did I enter from?
Where did you enter from?
I
Yeah.
entered from here one, then I entered another one again around here this morning.
Wow.
Yeah. So this when market was
Wow.
around here was when I called you to enter. So now this is just like an opportunity for you to
Mm.
jump in.
Okay. But you see that this entry is not really that strong. Assuming
Enter.
it's that up, it's 0.5.
Oh, stop. Just enter, sir. Ha.
Stop being afraid. This boy make money. Okay. I will enter. I will enter. I will pray. I will pray. If I don't pray,
From this one, so if it gets to our take profit, if it makes you good money, I'll collect my commission from this particular trade. But hold it. Have you entered?
I, should I enter?
Enter the cell now.
Okay.
Put your stop loss here. Put your stop loss at 8171 point. Are you with me?
Mm,
8171.7962.
okay. 155 points. That's about $7 risk. Better just go down because if you don't go down, you enter this phone fight. If this trade goes bad, God forbid, sha.
If it goes well, what's up?
At least we no longer will be in profit finally now. Finally.
Set take
Like,
profit at this point. Set take profit at 795.
okay.
7975.
7-9. I will be 8-9.
No, 7975 take profit. Now only if the only thing
Okay.
there is if we'll be able to hold it to that point. But that is where the
As
take
in
profit is. Take profit is at
7975. Wow.
7975. That's where the take profit is. So,
Wow.
but the only thing is if we'll be able to hold it to that point. That's just the only
I
problem.
swear, like 7975. Wow. If that one go you take profit last one, now to buy small bets, small bets, just small bets like this. All these calculator bets. You can't decide to the risk now. I don't even understand where you go do juju now.
The thing there is, let's see. I took a quick scalp on this volatility 10, but I don't like it. I will just close out volatility 10. I want it to reverse again because it has left us. Now you see one thing. One thing is if you look at something we have been doing, we have only been trying to take entries on our exact points and levels. This one now we are doing. This whole move we are trying to catch at this top here is just like we are simply catching what I would simply call a we are trying to catch at a sniper level. All these things we are doing here,
Mm.
we are just trying to catch at a sniper level. That is what we are simply doing.
But ideally, we are supposed to catch after confirmation.
No, like okay, ideally, if we want to catch this original move, what we would have loved to see is this. We would love to see this. That is for the higher time frame. If you want to trade it for the week,
Mm.
we would love to see this. Then maybe market gets into this area, and then we'll begin to see the structures being created to the downside. You understand? Until it hits this low.
Mm. Mm.
You understand? But now, because of our
Mm.
knowledge, the knowledge we have in this particular business, let me let me delete all of this. So now, let me show you something. The first thing actually
Mm.
that I looked out for on this particular market was to first of all look out for the trend of the market, which was the trend between this particular high and this low. Now, when I did that, I clearly understood that yes, we are in a downward wave, you understand, and this is a range. But now, coming from a downtrend, like coming from the upside, which signifies that this is a downtrend and this is a range, what are we to look out for? Like, what is the major thing that we can look out for in this particular market? It will only be ideal that we take sales, and if we are taking buys, we are only taking buys from zone to zone.
Mm.
Good. So now, that being the case, like if you look at this particular market now, let me show you something. Let me just analyze something now so you get. Now, this is liquidity sitting, resting here. Now, I want to take my time to break this market down so that maybe it makes sense. Now, because the market actually gave us a zone to zone here, it is only ideal that we mark here as our break of structure.
Yeah.
This level. So it is only ideal that we mark that level as our BOS and this level as our liquidity, but I don't want to just end just myself writing again. So basically, this is also a break of structure, but it's not a break of structure that has the liquidity we are looking for. So this is just a normal break of structure. It might be the break of structure that created this retracement, and one would want to take maybe liquidity from here and sell off
What's the
all of
difference
that.
between break of structure and sweep?
Now
Is
this
it the
is a break
same?
of,
Would you
yeah,
call it the same sweep?
break of structure is a break to either the downside or to the upside. But a swipe
Mm-hmm.
or a sweep is the a swipe is basically the previous resistance before market created a new resistance that broke structure. This is for a downward trend.
Mm.
You understand? So we have a
Use
resistance here,
arrow.
but market
Use
before
arrow so
dropping
that
to
I will
break this
see.
low here, before dropping to break this low here, this low, it swiped this particular point, breaking this high here. You understand? So that being the case, this place becomes our swipe. Now, what does that swipe simply mean, or liquidity swipe or anything? It simply means that people's stop losses are resting here, so they come to take it before they can go down.
I don't say swipe like this swipe now about you're already talking about like turtles. He got souped, all those stop losses like stop horns. I'm
Yeah,
talking about sweep like when something closes at an equal resistance, like at a zone. Do you still call it break of structure? Like this at that 8000 at that 8000 level. Look at that place. Carry your mouse to that place. Come down.
800 level, is it this point?
No, 800. Come down. Look at the number right now.
800, yes,
Hmm. At that point, eh,
yes.
are we going to say that this comes to the middle now? It's in broke structure or it's just a swipe? Is it a break of structure?
Okay, good. So now, this now will totally depend on the trend of the market. You understand? So if you are in a
Mm,
downtrend, this becomes a break of structure because when you go to 4 hours time frame, this whole move to the downside is a complete candlestick.
mm,
So if you are in a downtrend, it becomes a break of structure to the downside. But if you are not on an uptrend, you understand, it becomes
mm.
a swipe.
It's
Yeah. So now, based on
okay.
this
Okay,
move
that's
between
what I
here
need
and
to
this
ask.
particular area, we got market got into the 0.618 first. Okay, it actually got into the 0.79, dropped massively, did not break, hit final take profit, then reversed again, and from this point, it started creating the structures again to the downside. So that helped us to understand
Mm,
the overall structure, even inside the whole range. Now, that being the
mm,
case, we can now go to the smaller time frame. Okay, now that being the case, we now see that this was the previous high, this was also a previous high. Now, if we should mark this one, market has not broken it, or even if it has broken it, just gave a little bit of the swipe. That's what you're saying now. So it just gave a little
mm,
move. We can still consider it as a break, or we leave it like we just mark it and understand that something happened at that particular point. But now it's more to the downside.
mm,
Now after that, market pushed gave us another smaller move here, which is a better break, and also it gave us a clear break now at this point. By giving us this clear break, that gives us better understanding or better view on what we want to do in the market. You understand? So
mm,
now that being the
mm.
case, I'm seeing you on $300, oh my brother. I'm seeing you on $300. That one position
Mhm.
alone.
It comes down, but
Yeah, yeah. So
because it's already almost coming down.
the
Although I
accumulation
didn't
at that
enter
point,
from this eight
mhm,
and five
the
place.
accumulation at that point is very strong.
Where did I enter from?
The only thing is that I'm with you now. When it gets to this particular level, we would watch what will happen. So even if it gets to this particular level, we would watch what will happen. If it begins to give them reversals from this place, which is rejection, we can liquidate and just leave only 0.1, close out the rest.
I'm already on 80 $19 profit as
It's
we
alright.
speak.
It's alright. So now, when we see this break of $19 profit, that is reasonable. So when we see this break here,
Is
we now have we now saw that there was after this break, or even before this break, we had a structure which we now consider our internal structure. First of all, liquidity. Okay, let me explain something. First of all, here we had liquidity swipe here. A smaller time frame liquidity swipe. Then
Mm.
market pushed up. Before coming down, making this major drop, it simply created another structure here inside this level. Let me try to give us what happened there so that maybe it will be of essence. Now, before market dropped massively, so you can see when it gave us a clear break of this structure, it reversed from this level to this level here. And if we want to calculate it, I understand we may not be using the main tool, but it will still give us an idea of what's happened here. So if we want to
Yeah, yeah.
calculate it from this particular point to this point. And what we will see clearly is that market respected between this high and this low, it respected the 0.61, 0.50. And there was a kind of fair value a break here. There was something here. Actually, what do they call it again? Is it not flip zone? There's a flip zone around this center here that created this market to respect this point and start dropping. But that is now looking for your confirmation on the smaller time frame. You understand? Because there will be an
Mm.
internal liquidity grab at that point and all of that where
Yes,
markets will now
yes.
respect. So that is for that particular guy. So based on that, we now got this particular thing here. What happened here? At this point now, this is a break of structure. If you look at what happened now, if you mark between this level now down to this level, like in that video course I sent you, you would see it there. You mark from that level to this level. If you set those levels, you'll be able to use your Fibonacci to do the same markup. Now, when you mark it, you clearly see that what happened. You see
How
that
do you
after
know
the
to
break
mark
of structure
from that
at this
level now?
point, huh?
How do you know to mark from that level? Why not
Very
mark from
good.
the upper candle?
So I mark from, first of all, how do we know when we mark from this level? We mark from, okay, let me go to the 1 hour time frame. I pray we are able to get back to this particular chart. So, one, the first thing we look out for is, okay, very good. So the first thing we look out for is we want to see, one, we want to see a liquidity swipe to the upside. That is the first criteria that gives us high probability trades. But sometimes we don't see it and we still take it. You understand? Those ones, you just know that you are exposing yourself to risks, but then it's just what it is. But then when we see this liquidity swipe to the upside, means that market has gone to stop people out. And this level now, between this level
Mm.
to the low, becomes a safe level to put your stop loss. You understand? So
Mm.
that way we are now able to mark this level. When we mark this level down to this point, the moment market gets into our level 0.618, we take our sell. We don't even look for. That is how this particular strategy works. Are you with me?
Mm.
So you don't
Mm.
really wait for a confirmation on those things. Once it gets into your level, you just take your sell, because a lot of times when I've seen the trades move, it always, once it gets in, it just moves direct to take profit. So once it gets into that level, you take your sell and then you hold in. Now, a lot of times recently we've been observing again from restudying the charts, we've been able to understand that a lot of times, just like what you saw in that particular pair, is it volatility, um, volatility 10, you saw that
Is
market,
it volatility 10?
yeah, it gave liquidity grab, then pushed up, tapped the other level and began to go down. So whenever it gets into this point, sometimes it will give us a structure, a new structure to take. Sorry, let me go and
Yeah.
Yeah, so basically, what we now see is that we can now see oh, my messages are already dropping on my phone on this early morning. Now, no one make a rest. Okay, now my PA. There are some stocks I would tell you about to purchase and just hold. I'm actually purchasing two today, but then that is aside. Now, I'll be purchasing I think I'll be purchasing more of SoFi stock, and I'll be purchasing more of. Are you with me?
Sophie.
Yeah, Sophie. I'll be purchasing more of that stock, and I'll be purchasing more of Sound Hine or so. It's actually on my YouTube channel. And I'll make a video on it soon to talk about how the whole market actually reacts. So now, using this formula, you just take your entry here and then you take profits at this point. There's noise coming from your side though.
Should I off my this thing?
You can reduce it. I didn't say you should off anything.
You cannot reduce my
Okay, what is okay? So something is on.
on. Maybe it's the inverter.
All right, it's all right. So
Are you
no, I'm okay. So now we now see that at this point when market got into the 0.618, it dropped and rallied to the upside. Yeah, I'm hearing that speaker. You can off the speaker. I think.
I should off the mic, Abby.
Yeah. It's echoing.
Okay.
So now we got the fact that market got into this level and we enter our sell. So the moment you enter your sell at this point, you put stop loss here. Your target will be this level. Now, your before even entering, you have understood that on this particular trade, you are going to be risking twice, which is you are going to risk first and then second. Let me explain. Before entering the trade, first of all, you have to understand that, and that is how we trade. You understand? You have to establish the point that you are going to be taking two risk trades. You understand? One from the particular point and the second one from this level. So if this particular trade, first one you take, they hit take profit. I
In
mean,
case it comes back, Abby.
it since it goes to hit stop loss, we take the initiate the next one with the same lot size, and then that one covers up for the trade and hits us back into profit. So this particular
But why
loss we
not
made,
take but why not just take the two as one trade and then leave it so that it can just still enter that one instead of like setting another what's it called? Another buy limit, a sell limit there.
now that is another point. That is another valid point, but I don't really know the formula around it. You see, when I'm teaching or when I'm doing anything, I most times don't really I adjust certain things, but I don't really adjust most things because now the risks between this point and this point, some persons will not like to see an expanded risk on their account. You understand? So they may decide, okay, I want to risk X amount of money, and that is just what they want to risk. You understand? Are you with me?
Yes, I'm with you. You know I had to off my mic now.
Yeah, so they might just understand that they want to risk X amount of money and they don't want to risk more than that. So some people are cool with risking, and we are not sure with the move. We are not sure about where the market will reverse from. So it's a business of anticipation. And when you hold it from here to this point, it's a lot of pips. So now, just with let's do a little calculation. Now this is even step index. Let's do a little calculation. If you take a trade from here and then I understand that it's the same thing even when you it's the same loss if you lose this trader. If you lose the first one and lose the second one, it's the same loss. I don't know if you understand. But if you take with the first one, this move and maybe you lose $10 or $15. Let's say you reach $15 and you lose $15 now on this particular first move. Now between this move and the second move now, that $10 or $15 you lost, risking the next $15 from the move market makes from here back to this point is going to give you back your $15 and still run you into the normal profits you actually ought to have entered remained on. I don't know if you understand what I'm saying.
I know.
Yeah, so in terms of holding it from here to this point, I don't know. For me, I would not even be okay with that. You understand?
The truth is, can I say something?
I'm with you.
Except if you enter into like the upper one, except you're now adding both the loss you made, like increasing the lot size. That is the same thing. The only point is that okay, maybe people would now see the risk as too high a risk, but it's still the same thing. Whether you see it as high a risk, or except you are not going to obey that you are supposed to take another trade from now up. As long as you're going to obey, it's still the same risk you're still going to take. So I don't really mind. I mind my own is you know that most times I might just be busy. You get,
Yes.
and I might not just know when the market has already hit my loss and it's already taking the other end. It's supposed to have already taken the other entry, and I might
Level.
miss. Are you following?
Yes, I'm with you.
I might just miss the other entry. So what I like doing, if it was me, was just like taking the whole risk once and not say okay, if the thing like making more, after all, I don't already decide say if him hit the top plus, he will definitely take another trade. So I will just put all once, leave am. So looking at one ratio 1.5 be the
Yeah.
trade.
Yeah,
Uh-huh.
that is actually still okay, and that is also it's still a form. You understand? It's still a strategy embedded in this particular strategy. You understand? Mm. But that way, you now understand that anytime you are picking your liquidity, you must find a reasonable liquidity grab before you execute. You understand? Like this kind of a liquidity grab, for instance. Like
I
this kind
get
of a
you.
liquidity grab, you need to see that okay, market has created this kind of a liquidity grab, then a break of structure, then you clearly expose the fact that you are going to be initiating your entry. Let me remove these guys. So when you see this kind of a structure now, you clearly expose the fact that your trade will be taken from this particular level to this low. Then you can see what happened. So you can now say, okay, once market gets into this price, you put your stop loss at this high, and then your take profit will be either at this low, which is the original place where you're supposed to take profit, or you put it from the original final low. You understand? So you see that it has been established and established properly. So for you to get a very wonderful trade, you need to see a clear liquidity grab, clearing people out, this move, market move, clearing people out, and then giving you your break. Now the break now it gives you is of two levels. It gave you a break on smaller time frame and it gave you a break on bigger time frame, but all of them created respecting this level, into that other level, this particular level. So it's just it. Actually, the guy who taught me this particular strategy, he's more of a risk taker. So he may fund the $200 and risk the complete $200 on his account. I don't know if you understand what I'm saying. Can you hear me?
Yes, I can hear you. I was going to say something. I forgot that I off my mic.
Okay.
Actually, that's actually how to make money. Do you know? It's just that I have actually tried that a lot of times, and due to I've been wrong in a lot of times, I've really lost a lot of money because normally without you, what I trade is boom and
I traded, yeah, you see Boom and Crash. I actually was called the king of Boom and Crash. Then that was my nickname in school when I was trading Boom and Crash. Now I understand Boom and Crash to the same way I pieces these guys is the same way I piece. Yeah, I made a lot of money from them, but I was not really okay with the way I saw the move and everything because sometimes I'll be in profit and all of a sudden spike will just come because most times I trade against the spike and everything. If I'm trading in favor of the spike, I will be favored. You understand? But if I trade against the spike, these guys will kill me. You understand? So
I get you.
yeah, so looking at that other negative side, that was the reason I said, okay, no, I will now have to close trading boom and crash and focus on trading. volatility.
Volatility.
Yeah, and since I focus on trading volatilities, it has really been going fine. Then there was an issue I had with one guy. Then I think when I helped him make about up to about $10,000. Okay, in 2 months we made about $7,000. I was
Mm.
supposed to get a commission from it, but he did something wrong and I was not happy about it. So I will not go chasing him and everything. I just left him. Now me get
He did
knowledge.
not give you your commission, no money.
He carried the full money run. And I stand. You understand? You understand? You understand? You understand? You understand? We both paid for a mentorship, but because of the level at which I do how will I explain now? The level at which I'm able to understand things is very fast. You understand?
Mm.
So I actually took charge of teaching people. My boss actually had coaching. You understand? So we are all
Mm.
students together, but I had to start teaching him. You understand? To
Mm.
get better understanding. They were not understanding the guy very much. Though he's a Yoruba guy, so his tongue and everything, they were not understanding him so much. So I took over, I taught and everything. So while I was doing that, they were all enjoying the lectures, enjoying the program, and we were making money together. But the energy I gave to him was much, just like almost similar energy I'm giving to you. So, when you wake up 7 o'clock in the morning, you're analyzing and dropping signal to somebody, and people have discussed, you have a based agreement already. So,
Mm.
all of that, but that aside, now on this particular market, you see it's reacted from this point and now heading for take profit. If you had put take profit, stop loss here, it's still okay, but then, bro, if I take my stop loss here and I hit stop loss once here, I would not be able to take the next two trades. So even if market goes in my direction,
Like psychologically, ba.
yeah, I will not be able to take the two trades because first of all, I would say, what have I done to myself? You understand? That's the first question I'll ask myself. You will doubt this strategy, bro. Hit stop loss now. Maybe hit stop loss like that formula. You will doubt the strategy. But that's my own side of it though. But you have your reason which aligns with you going to work and coming back from work and all of that. So that is totally different. You understand?
Yeah, yeah, I'm with you, boss.
So basically we see after that happened, we got a break to the downside. We got liquidity swipe by this move to the upside, break of structure to the downside. So whenever you see this particular structure, it's really a nice one. I don't know. I've been seeing more because now one thing that the bad side of this strategy is this. I must be sincere with you. It's not really a bad thing, but the bad side of this strategy is if you are taking trades for a sales using the liquidity swipe, you would mostly be catching more of sales than during that period. But once you change and you start looking for you maybe when you notice the major thing is understanding the trend. So if you understand the trend and the trend is more for a downtrend and you're taking sales, you'll be taking more of sales. But if you're taking buys, you'll be looking for more of buys. So ideally, like your mind will just be looking for more of buy trades naturally without any big correct. I don't know if you understand what I'm saying.
Yeah, yeah, I'm with you.
Yeah, psychologically you will just be looking for more of sales. But then look at this one.
More buys than sells. Because I noticed that you're always giving mostly sell
Yes.
calls.
Now it's not because it's only sales we are looking at. No, no, no. It's because psychologically I'm just looking at the sales, you understand? And that is what I've been catching. So because I've been catching sales, that is why I'm psychologically just looking for sales. If I understand that we are in an uptrend, I will psychologically switch and begin to look for buys, you understand? So this now happened and we can see. So this whole thing just keeps repeating itself. Now what happened here? Okay, after market hit take profit. If you look at this particular area here, market gave liquidity, it gave a break of structure to the upside. Let's not even talk about this smaller zone. Let's talk about from here. So I want to still delete everything. So now let's talk about from here. After market hits this take profit here, one would understand that maybe you want to begin to look for a smaller retracement. But now what happened? Market gave its first break of structure at this point, which was this one, and it gave a liquidity grab here and then pushed up, breaking structure. Now market came back down, respected the 0.5 forward something level and pushed up again. Then from this level, it came back down, respected this level. So let's look from this particular level. Okay, let's start from the first level. From here to this level, it respected 0.618 and slash take profits, which is nice. And then the second level again, which is this second break of structure, with the same liquidity graph, respected this point here, which is 0.6179 level, and you see slash take profit, fine. Now after that happened, what can we clearly see? We can clearly see that there's a liquidity grab here. You're with me, right?
Yes, I'm with you.
It's all right. So
Or should I unmute?
no,
Because I'm
on
talking
mute.
since, so it's just I will not forget.
So I like
Okay,
I like
okay.
a discussionary lectures anytime I'm teaching.
Yes. Normally, that's how it's supposed to be. It's just that you said something. I'm actually talking, but I'll now realize that you're not hearing me. Then I'll now go and unmute again.
Okay, so some people, some students, some lecturers though, so like some teachers, they don't want you to talk. They don't like you to talk while they are training. They just, you understand?
Mm-mm.
They just want to do their thing and you listen. So now, for instance, this particular move is the one that favors that your strategy. That's your pattern of taking trade here and putting stop loss at this point. So if you are taking your trade here, for instance, stop loss got hit at this point, then the next one got triggered. Market went into take profit. You understand? But now, why did this market actually hit take profit at most time? It hit take profit because of the liquidity grab here, which was this particular liquidity swap. So that was,
Mm.
yeah, so that was that for that particular market. Now, this move, we got a break of structure at this point. If we use this low, now there's no liquidity swipe. If you use this low, target it to this point. You see, market tried hitting, respecting it, but swipes it out. Now, at this area again, there's a liquidity swipe, but it's a small one. And if you drag it from this point to this break of structure and this break of structure, which is this now being the major break of structure because this one has been taken out. This is now for
Yeah, I
buys.
just checked now. I'm already about $50.
Yeah, I saw it. I did check am from here too. I'm checking it on my small phone. You are up about I checked the last time I saw you were up about 46. It's all right. It's okay. So now when you look at it from this particular area down to this point, see how it's respected. It's why because of this liquidity swipe. So that was it, and market did its thing. Now, originally with this strategy, this is where we are supposed to be taking profits, but I have understood that market majorly would hit this point before even reversing, and this level is a very secured point for take profit. I like to play it safe than to play it risky in a risky form. Now, this area will require you to wait for a longer period of time, and I'm not ready to do that. So once it hits here, I'm okay. I go and rest, or I look for another opportunity in the market. So that's it. Now, after that happened, we saw something again, which is a very significant stuff. What happened? From this high, we got a liquidity swipe again at this point, which is a small one, which was the original liquidity swipe we saw here. When we drag it through, we can see what the hell is going on here. Happened here, I mean, sorry.
Mm.
So the shit going on here on this point, it happened here. So what happened? Liquidity, creating its liquidity swipe. It also created a liquidity swipe here. Now that is the sweetness of this top-down analysis. So if you are doing top-down analysis, especially when you are checking, that's why if I want to start analyzing any pair, before I start analyzing a particular pair, I always go back to check the history.
Mm.
So I go back to check the history of what has happened in that market before. That will now help me understand what will happen in the future also.
So you just analyze like as if you are backtesting the pair first.
Exactly.
Mm. So this is even more important than knowing how to analyze.
Yes, and that's why sometimes I have a friend who is a trader too, but we use different strategies. We just come. I call him most of the times, and we analyze. We just talk about the market and all of that, motivate ourselves and the rest. Now, what happens? I when I tell him to analyze the chart for me, or when we want to analyze the chart, and I discuss with him concerning analysis. When I say, "Oh, analyze this chart for me," and I open the chart, he won't even go back to this previous time. You understand? Just from here, he will try to tell you that he understands the chart and he will take. Now, if you understand, if you look at it this way now, you'll be seeing an uptrend.
Mm.
You will not be able to catch the reversal.
I'm telling you, you just from here now, you just pick a buy from here and you be stopped out.
It will smoke the hell. So now,
I
that now
just
helped us to
funny,
understand
man.
that.
I just funny so much that I started wondering if they are blocking my account. Like I told my friend that they have flagged my account. They have flagged my derivative account. That anything I do, the market just goes again.
Uh, Sometimes it's what we still call impulse trading too and everything. So, well, let's see how it goes. Let's just be trying. Small, small. We believe it will end up fine. Hopefully. So,
Okay.
yeah. So now we have this whole move, liquidity swipe from here to the downside and all of that. Now, market dropped massively. So now what can we simply do? We are repeating what happened there at this point here. So you can see the liquidity swipe. There are two liquidity swipes here, either this one or this one. So it's almost at the same level itself. So it makes more sense. And then what happened? Market has got into our level. It's created liquidity before at this point. It created stop ons, and now we are playing around this particular zone. Now, if I should go to the higher time frame and I want to set stop loss, what will I simply do? Because the market has started moving, I'll just come and drop my stop loss above this particular daily candlestick here, above it.
Mm.
I'll drop my stop loss a little bit above that daily candlestick. Now let's go to the 1 hour time frame. So we do our thing, we hold the market and then see. Yeah, so that is it. Then another thing again that would now initiate a stronger belief in this particular market, or that will give us higher level of strength in this market. We have gotten liquidity, we have gotten our swipe. This is liquidity here, resting here. We've gotten swipe. Now another thing again that we would like to see give us more strength in this particular entry is this level. So if we are able to see a break of this level, are you with me? If if I'm able to see a break of this level and a
Yes.
retest inside this level, it may do. Now, market does these things, which we see most times. It would drop to this side, create a new high from this point, test, come back, test it, this point, 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 break, and drop again. So now that's what market does at times. Why sometimes to give us a drop, come back into this level, give us another drop, come back into that level, then maybe make the full break, gives its normal smaller move, and we're good. So that is it. Um, so these are analysis for the. You see, most times that is this which of the market actually did we do that? Let me see. Okay, this is volatility 10. Volatility 10 massively selling. So if we can get another opportunity to take an entry for this volatility 10 sell, it would be nice. But for now, can we
For
enter
a
any
step.
trade? No. This is what we should be waiting for. We should just mark this level. Anything that creates a new now mark this level and mark this level. We would simply be waiting for market to come into this zone and give us an entry or close to this level. Now that is for the volatility 10.
Mm.
Now this guy going for a sell. Going for a sell. I'll explain. You know why I'm saying this whole thing? Now, what happened here?
Mm.
We have we have liquidity grab here or liquidity swipe. We have break of structure. Then we marked from this high to this low. Now, first entry, liquidity here. Second entry is supposed to be here. Now, if you look at this market, it has been repeating this same character. Even here where it stopped us out. Here again, it will stop you
Mm.
out. Here again on this structure, the same thing. You can use a one lot though.
Okay, I should enter by 25 for a
Yeah,
step.
one lot, two position. Yeah, one lot, two position.
Okay.
Stop loss will be here.
Just call out the stop loss.
The stop loss is 2013.1942.
So sell
Yes.
with one lot size, I mean.
Yeah, two positions.
2019. Is that what you said?
2013.1942.
2014 then. About $14.
Call the stop loss you have there
Let's
again. Let
see.
me hear you.
$14.
I mean, call the stop loss like in terms of the number.
2014.
2013.19.
Okay. Okay. Done.
Okay, I'm setting mine.
$13. 13.4.
It's alright.
So you say two positions now.
Yeah, two positions. If you're there outside, you hear this sound. Bam. You shake your head, say yes, that's my guy.
Somebody's doing something very deadly there.
Yeah, someone is
Don't
doing
try,
something deadly.
don't try that at home.
That's exactly what they say. If you no get mine, no put body. Oh.
You go dey put body care. Think is everywhere that can take the loss I've taken in this market. Do your feet.
There's an entry also on this.
What kind of stuff?
I beg, I don't tire. I just dey see my eye. Okay, I don't close them now. I sleep. Now why? I don't go open my eye now. I don't dey see money everywhere.
No, that God
So
do for you. You just see money everywhere.
it's not still a lot of bills there. No worry. Oh. Bills choke. Oh. So that in- 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 so that in case you are out away normally, it automatically close. So the take profit is 1945 or 1945.2597.
195.2597.
1945.2597. Hmm. So we've checked out the volatility 10, we've checked out the volatility 25, we've checked out the volatility, the step index, and the last we have to check on the list is let's just look at crash 500. So crash 500 is already dipping into profits. It's dipping into profits. I took my entry around here. I'm on $24 each. $24 each. So this is our liquidity grab here.
Hmm. Like you don't like 300, but it's too volatile for you.
No, I don't do anything that is too volatile. I don't engage. I disengage. So ideally, this particular trade, I did take profits at this point here. Yeah, so once it hits this point now, you are on your own. So you are now to decide if I'm now to decide if I want to hold it till this point or I want to hold it till this overall point. You understand?
Hmm.
I've just seen this guy has just, if you know when I analyze this pair when it was retracing around. I think I even analyzed it when it was making all these trades. Push up, drop. I was getting it. This is a liquidity swipe here. Push up. This level is a hot zone or hot spot for entry. Then it did the kind of thing it's doing now, which took out your stop loss, takes out stop loss and continues the move, which is happening on 25 now. Then this is the final take profits now for any person who is on this trade. This is the point where if they hit take profit now, they can say, okay, let me go and sleep. I don't deliver. So that's for that particular pair. The last one we'll be checking is this volatility 101x.
Honest.
Yeah, so volatility 101x, we can clearly see that using this liquidity swipe, which is this one, that created this whole break of structure. We condition it by our swing high and swing low. And that is what tells us that this guy is going to get to this point. But it's working from this flip, so it has tested it the first time and 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 tested it again the second time. Now that being the case, two things. The first area that one would have been looking out for a break of trend is this particular area. So now when you get this area, market breaks trend line and went back to that trend line and tested it and closed below it. So anyone who saw this trade would have taken a sell here upon this retest candle and
Yes,
hold
that's what
it.
I
Now
was
that
saying.
was what you saw, I understand. Now that was this particular point where you saw that particular move. Now we can go in for a sell, but we can go in for a sell and we'll be in profit. We just hold it. If we are taking this trade, I would like us to hold it for like days. We look at serious for we just check it and leave it. Let's do it like milk deriv. Not be milk deriv. You know him, right?
Big there is the whole trade.
Yeah, that guy holds trade
Where I
for
say
as
now,
long as 1 month, sef.
no be lie.
One position
We
0.5
check
will be
trade.
making, yeah, will be making like almost a very stinking amount of money. So now, based on that, we can now see that rolling with our first trend line and our second trend line, we have market at this area. There is possibility that from this point it will come back here, but then it's very slippery. So when we see what happened here, this was not a clear liquidity grab, but we just still tried to take it as a liquidity grab because we got a swipe here. And then ideally, market was to get from this point our take profit, but it has not taken our profit out. I remember I told you that this level is our overall level of take profits, which we always look out, mark the zone we are trading, 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 zone we are trading. So let's go to the smaller time frame and see what happened. Now on this smaller time frame, we have a liquidity grab at this point here to the upside. But you can see that there's no swipe, there's no break of structure at this point, so this guy is not valid. So let's do something else, which is we'll go to the 15 minutes time frame. Now on the 15 minutes time frame, that's where we see something like this now. This liquidity swipe here and this break of structure here. You see that liquidity swipe and this break of structure. But now because it's very small now, one would contemplate using it. Then we drag it through to this point before retracement. Now this is really something I would not like to do. And then when market gets into this point, I enter. So if we go entering from here now, you can imagine what our risk is, which is not even ideal. Except we want to adjust, like coming down to maybe 5 minutes time frame.
If you ask me, I would say let's just leave this market because this market can just decide to go back. To
I'm
be
telling you,
honest.
that's what I'm saying. It's not giving us any good structure. If you see liquidity grab here, we see this guy here, and then from this swing high to the swing low, that's where it respects this particular point again and start dropping. But you see, even on smaller time frame, we don't have an entry. So, are you with me?
Now where I go?
So now I would like you to do something for me also. When we're analyzing the market, I've explained the structures and what we look out for. This is already 1 hour something. We can record in this class. I'll post it on YouTube now. Now, whenever we are looking at the market, I would always like you to ask me for my analysis. Ask me what is the level we are looking at for entering, what is the point we are entering from. You understand? And what is our take profit? Now, this is the formula, and this is how it ought to be at any point in time. So if I'm not bringing out something like this, then we are not having we might not get value from that trade.
So the first thing from everything you are always analyzing that I've noticed there. Can I talk?
Yes.
The first thing you always look out for when you look at the market, even when you go back, you always look for first thing, the liquidity grab, which is like the turtle soup in people that are trading CROs.
Exactly. That is
When the
this.
market has already done something like a breaker, you always look for it first, and you always make sure that it aligns with your general structure. Like
We make sure it aligns with
if
the
we are
trend.
going, yes, the trend. So if you are going on a downtrend, you make sure that you are looking for a liquidity grab towards the downside. So after you have found that, you look for the low of that liquidity grab. Then
Yes.
you mark up that out and check if the market has broken that low. If it has not broken that low, you now do what? You now check for the closest entry or where it is retracing back to that liquidity
We need,
grab. After
yeah, so
drawing
we
your
need to look
Fibonacci.
for, now we need to look for, first thing is we look for liquidity swipe. Second, we look for break of structure. Thirdly, we look
That's
for
what
the
I'm
swing
saying.
high and the swing low. We mark our Fibonacci before we now get that retracement.
Mm. So that's what I noticed that I'm always doing. Because me, I'm very observant. If you watch, if you're always talking, I'm always silent. It's not that I'm not listening. No. It's that I'm observing everything you're doing.
Yes, that's it. That's it, exactly.
So what did you say I should be doing now? Like you said something about I should always ask you what is the analysis, something like that.
Yes, always ask me to be sure that we see one, a liquidity grab, two, a break of structure, and then we can source a a a a a a a a stronger view of the market. It gives us a more defined entry. That is an entry that has a higher probability. You understand? But occasionally, yeah, occasionally the market also will not give us this kind of structure, and market will just give us something like this.
So one is liquidity grab, two is a break of structure, three is what a break to the what downside.
Yes, one is liquidity grab, two is break of structure, three is two is break of structure. Now three is from the level where we got our break of structure, and we now mark the recent low and the high. We mark our swing high to the swing low. You understand?
Mm.
Then we look out to take our trade from the 0.618 and 0.79 level. You are writing that down.
Mm.
All right.
So
Now, so if
like
I dey talk, my VA
liquidity
go dey write
grab,
everything
first
while I
of
dey
all,
talk down. I say what?
this guy, I didn't write everything down now. Like I did write this point because like
Those are the
I want to use
confirmations we
them
have to
later.
see before taking taking entry.
Yes, exactly. That's why I'm writing it down. One is the liquidity grab. After I
Yeah.
have found the liquidity grab, you
Yes.
look for the structure where the market has broken that. Is there any low that the market has broken from the liquidity grab?
Yeah.
Then after finding that, you now mark out that low and mark out that liquidity grab as the high. See? Then you
Yes.
now put your fib from that high.
Swing high to the
That's
swing
from
low.
that liquidity grab high and
Yes,
that
like
low that the
this.
market took out before.
Exactly.
Look for the retracement of the market.
Yeah. So we look for the retracement and then we take our entry from that particular level. We put our stop loss
Very,
and
very easy strategy and very nice. Very, very profitable.
it's simple now. Market no suppose analysis no suppose hard. Now all these people when they use maths, they
I
finish
swear.
person. They do trading like say trading now. You take out for couch, you take this, you take
Let me
that.
see all this. ICT guys for YouTube go watch you. Guy,
Yeah, but
it's
there are
going to
still a
start
lot of
showing
things we
mercy.
look out for. This is just the basic side of it. There are still a lot of things we
Yes,
look
I
out
know, I
for,
know.
but
No.
yeah,
You still check and confirm if there's another blog there. You check if the
yeah, a
blog is
lot of
anything
things. Yeah,
like
all those
I know all
things
those
we still
most
look
of
at,
other
but
things. I know
this
all
is the
those things.
major framework of what we are doing.
Mm.
Yeah, so it's all right. Thank you for the time and everything. I know so now you go say you appreciate.
No, I appreciate it. But you do
Yeah,
best,
it's all
right?
right. It's all right. Let me drop my extra talk for my channel. You understand?
Okay.
So hello
No
guys, this
wahala.
is Larry FX Academy, and I enjoin you all to do subscribe, enjoy the comment, learn from everything we've talked about on this channel, and make sure to click on thumb, the like section where it shows other persons. You understand how to get
Mm.
value from this particular video, and that is it. Do have a wonderful day, guys. Peace. One love.